What's up, everybody? Today we are going to be talking about MicroStrategy, ticker symbol MSTR, or I guess nowadays they're just called Strategy. Someone asked me about this company in a comment in a previous video. I think this company for a lot of people is like a black box. They don't really understand what's going on, what they do. And the truth is, it's not that complicated. But one thing I have noticed is this stock definitely has a bit of a cult following around it. There are people on X who just post about MicroStrategy stock, who kind of treat their chairman, Michael Saylor, as a prophet. There are channels on YouTube who basically only post about MicroStrategy. And let me just start out by saying, regardless of whether you are positive or negative on the outlook for this company or any other company, do not fall in love with a stock. And don't hate a stock either. You need to be able to change your mind. You need to be able to look at information rationally with a cool head. I don't hate MicroStrategy. I don't hate Bitcoin, but I'm going to explain to you why I don't own it and why I think there's a lot more risk here than some people realize. Now, MicroStrategy stock has done incredibly well the past 5 years, but what does the company actually do? So they own a absolutely massive amount of Bitcoin, about 600,000 Bitcoin right now, and they sell all types of securities, primarily their own stock, to raise cash to buy more Bitcoin. We'll get into how that works, why that works in a second. I should mention that MicroStrategy did have a legacy business, or I guess they do have a legacy business. It still exists. It's just so small in relation to the size of this company. But, they do sell types of business solutions, and that generates, about 75 million a year in EBITDA. And if we adjust that for their share-based compensation, it's really nothing. But even if I give them credit for the full $75 million, and if I give them, 10 times or even 20 times multiple on 75 million, you're talking about $1.5 billion. So essentially, even if I, took the most optimistic view of their legacy business, I'm essentially saying, yeah, that should be valued at no more than $1.5 billion. And this company right now is worth over $100 billion. So the legacy business, I'm really not going to focus on it very much in this video. It's essentially insignificant to the value of the company. This company's asset is just really their Bitcoin holdings. Now, the first question you might have is, okay, well, what are these Bitcoin holdings worth? Well, at today's price of Bitcoin, we see here, Bitcoin NAV, net asset value, is, about $63 billion. But the company is trading for, $106 billion. And then once you factor in their debt and all that, then you're looking at an enterprise value of about $117, $118 billion. So this company whose only real asset is this Bitcoin is trading at an 86% premium to the actual Bitcoin they hold. So the first question you have is why? Why are they trading at a premium at all? Now, let me just say, if you want to really understand this company, two really good videos that I think everyone should watch if they're interested in this is watch this interview with Michael Saylor. And then the other thing that I think you should look at is check out their most recent earnings video. Right here on their website, first quarter financial results. And if you look at this, about the first 30 minutes or so, they're just going through the numbers. But then Michael Saylor jumps on and he really goes through, just about everything someone would want to know. He spends a long time talking about this slide here. Why does MicroStrategy trade at a multiple, trade at a premium to its net asset value? Before we get into any of that though, I want you to understand how this company operates, how they really work. I want you to understand what I mean when I say they're selling securities and then using the cash to buy Bitcoin. So to give a quick example, let's just say that a Bitcoin is $100,000 and you own $1 million worth of Bitcoin. So that's 10 Bitcoin. Now we just said these 10 Bitcoin are worth $1 million, but what if, instead of me having just 10 Bitcoin, what if I make a company? And what the company holds is these 10 Bitcoin. How much is the company worth? You'd probably think that it should still be worth $1 million. But, as soon as you have a company with a publicly traded stock, the stock price can trade at a premium or a discount to the underlying net asset value for all sorts of reasons. Maybe there's a bunch of people out there who want to buy Bitcoin, but, they actually only invest in stocks. Well, look, here's a company. It's a stock. You can buy it, and it's basically Bitcoin. Maybe there's institutions that can't buy Bitcoin, or maybe there's funds that just have capital flows that are flowing into some index that contains this company. Let's say for argument right now, for whatever reason, this company just so happens in this moment in time to trade for $2 million. So it's basically, 100% premium to the underlying asset value. And let's just say that there's 10 shares. So each share has 1 Bitcoin per share. And a share, because there's 10 shares, is worth $200,000. Well, because the shares are trading at a premium to the underlying asset value, What if management goes ahead and says, let's sell another 10 shares of our company into the market. We can sell those 10 shares for $2 million, $200,000 a share. Now our company will have 10 Bitcoin and $2 million. Well, what if now we take this $2 million and we buy more Bitcoin with it? You could buy 20 Bitcoin now. So at the end of all this, you're going to get 30 Bitcoin and you have 20 shares, because remember, we started with 10 shares and then we sold another 10 shares into the market. So what started as just 10 Bitcoin for 10 shares, so 1 Bitcoin a share, now we have 30 Bitcoin for 20 shares. So we end up with 1.5 Bitcoin per share. We've generated what Michael Saylor refers to as a Bitcoin yield. Now, it's not like a yield with money that you have at the bank where it earns interest, but kind of we were able to leverage our own holdings of Bitcoin to generate something that's like a yield on our Bitcoin. Now, this might seem like we hacked the system, that this is some sort of infinite money glitch, as they refer to here. It seems like we created Bitcoin out of nowhere. If all we did was exchange equal valued things, we exchanged our shares for money, and then we exchanged money for Bitcoin, and then we ended up with more Bitcoin per share. How did that work? I mean, the original shareholders here really did gain Bitcoin per share. I'll tell you, money was not just created out of nowhere here. Can you see at what point along the way these original shareholders got the money? Like, where did their increase in Bitcoin come from? It came from the new shareholders. Remember, this company decided to sell 10 more shares into the market. Now, those people who bought those shares, they bought them for $200,000 a share. They could have instead bought 2 Bitcoin, but they decided to buy 1 share of this company. So effectively, the money that came into the original shareholders, this Bitcoin yield that the original shareholders are getting, it's coming from the new shareholders that are coming in. And if you have essentially an infinite demand or, a super high demand for your stock, people that are willing to pay this premium, in our example, a 100% premium on your net asset value for shares, then you can keep doing this. Our company that we ended up with has 1.5 Bitcoin per share. Well, if it trades at a 100% premium still, then it should trade per share at the price of $300,000. And that's assuming that Bitcoin didn't go up in value at all. Well, you can just go and do the same thing. You can sell more equity, use the money that you raised to buy more Bitcoin. And as long as your company keeps trading at a premium to net asset value, then you can still keep generating Bitcoin yield for your original shareholders. And this is what Michael Saylor refers to as kind of the flywheel. If you understand this right here, you understand 90% of what this company is doing. This is effectively the business model of the company. Now, they are selling other things other than just their common stock. They're selling convertible debt. They're selling a couple types of preferred equity. If you want to look more into that, you can see their ticker symbols right up here in the upper left. We have Stride, STRD, Strike, and Strife. But effectively, these are kind of different variations on what we just went over here. Yeah, it's a little more complicated, but this is the fundamental idea. And also, the vast majority of the securities they are selling are simply their own stock, just at the money. So can they keep just operating this infinite money glitch, as they call it? Well, if the stock continues to trade at a premium to the underlying net asset value, and if the demand for their stock when they keep on selling equity into the market is, close to unlimited, then yeah, they can keep operating this. They don't even need the price of Bitcoin to go up. MicroStrategy has been called a leveraged bet on Bitcoin, but that's not exactly right. I mean, yes, considering that the company's assets are just Bitcoin, then if the value of Bitcoin goes up, the value of the company will go up too. But really what they need is this premium to net asset value to remain. This number that they advertise here, that's currently at 86% premium to net asset value. So now let's go back to this slide here where Michael Saylor talks about, why do they trade at a premium to NAV? And he talks about this slide for about 15 minutes. Their last earnings presentation, roughly 15 minutes, is this one slide. I'll show it a little bigger here. And it makes sense because this is basically the crux of their business model. They need this to trade at a premium to NAV. And he raises a lot of valid points. Many investors are obligated or biased towards investing in securities over commodities. MicroStrategy has a credit advantage over Bitcoin. So, basically, if you own a bunch of Bitcoin, that's great, but you can't take out a loan against that. But if you own a lot of stock, maybe you could take a loan against your stock. So, that's part of what he means by a credit advantage, because MicroStrategy is in a bunch of different indices that could drive capital flows and that could push the value of MicroStrategy above their underlying net asset value. A lot of these reasons are really trying to argue why, maybe if you have 10 Bitcoin, that could be worth 1 million. But as soon as you have a company, then the value doesn't have to be 1 million. It could be even more. And if that strikes you as a little bit off, I think you should trust that intuition, because there's a lot of risk here that they actually never mention in this presentation. For example, never do they consider the possibility that the company might trade at a discount to net asset value. Just like they give all these reasons why the company could trade at a premium to net asset value, there are reasons why companies trade at discounts to their NAV. Just to give you a few, you could have, agency risk. So if you have 10 Bitcoin, you know what that's worth. It's worth, let's say, $1 million. But as soon as a company controls 10 Bitcoin, well, maybe the company might do something that you don't like, that is kind of stupid. So if you're thinking about what you would pay for a share of this company, maybe you would decide, you know what, I could just buy the Bitcoin on my own. If I want to buy this company, I want to buy it at a discount to NAV. Or maybe, just like capital flows can really inflate and increase the price of MicroStrategy, what if there's a massive Bitcoin sell-off and you just have tons of people who are running through the doors for MicroStrategy? Well, just like capital flows can drive something up above NAV, capital flows can drive something down. And we kind of saw that in 2002. At a couple different times in 2002, MicroStrategy traded for right about their net asset value. So it wasn't a significant discount, but there was no premium. There was no 86% premium that they had at that time. Now, fortunately for them, Bitcoin turned around and likewise, their stock came roaring back. So I'm not telling anyone to sell MicroStrategy or not to buy this or whatever, but just my opinion. I think that if you want to buy this stock, you have to have conviction about two things. And that's one, that Bitcoin will likely go up in the long run. And two, and this is more important, is that the premium of MicroStrategy to net asset value will remain quite elevated. Now, for me, on the first one, I'm not a Bitcoin hater. I don't own Bitcoin, but I think it's likely here to stay. And what do I think the long-term future looks like for Bitcoin? I mean, I think it will probably go up relative to the dollar, but that's more due to the dollar depreciating. Do I think Bitcoin will have better return than a basket of solid companies? I mean, it's possible, but I don't have enough conviction in that, so I don't own any Bitcoin. I don't think I'm a hater or spreading FUD, as they say. I just think this investment is not for me. Now, the second question of will this premium remain elevated? I can guarantee that this premium is going to fluctuate over time. Yes, if they can keep operating this flywheel, it will work out great for them. If they just wanted to keep generating the same Bitcoin yield, as he calls it, year over year, they would need to keep selling more and more each year. Each year, they would need to sell more equity to maintain the same Bitcoin yield. I think at some point, it's very possible they simply run out of demand. They simply run out of buyers for their stock. And then you'd likely see this premium drop. But if this premium decreases, it could get very ugly very quickly for MicroStrategy. Also, I want to talk really quick about the insider transactions at this company because insiders have just been selling stock like crazy. Almost every executive in this company, it seems, once they exercise their options, they just sell them on the open market. So we see massive sales, 600,000, 700,000, 2 million. Here we have almost 10 million, $3.5 million of stock sold. And these are just the ones from the past month. Now, it's not unusual to see a lot more sells than buys at companies because executives get shares as part of their compensation or bonus packages, and then they don't want as much exposure to the company that they're employed by, so they sell them for cash. But the sells in this company are really quite massive. I mean, just over the past 2 years, we see over $600 million in shares sold and none bought on the open market by insiders of the company. Now, I will say, Michael Saylor, he still has a lot of skin in the game. He has almost 10% of this company, and he is definitely aligned with shareholders. But it seems like the other people at the company, the other 41 executives who are listed here, they don't really have the same conviction. A number of these executives have completely sold out of their stock. Just for example, this guy here, Carl Rickertson, he's sold just an absolute massive amount of stock, 10 million, 6.6 million, 8 million. I guess he likes whatever this other company he's a director on, Magnera Corp, because he bought that. But he sold $25 million of MicroStrategy stock. Now, this doesn't necessarily mean that MicroStrategy stock is going down or anything like that. I don't make a decision just based on insiders selling, but it doesn't give me a lot of conviction when the directors of the company are just dumping shares. Now, before we end, I just want to point out one thing that Michael Saylor said in this interview that is a little bit of financial nonsense. I just want to play this bit where he talks about valuing the company on Bitcoin yield.
Let's just focus on BTC yield for a second. What is it? It's the rate of increase in Bitcoin per share. So if I think we're getting close to almost an 18%, like 17% BTC yield for the year so far. And that means that between January 1st and today, you've gotten more than 17% more BTC per share. Mm-hmm. If I gave you a company and I said it's got a dividend yield of 17%, and I give you another company that says it's got a dividend yield of 0, it's like, Well, you would value the second one based upon the underlying asset, but you're not getting more. But the first one, you would actually take the underlying asset, and then you would take the yield, and then the question is, how long will they generate that yield, right? And what's the average yield over the lifetime of my holding period? So in that case, I mean, you could say if I expect 4 to 8% yield, you could put a 10, 20, or 30 P to E on that. Sometimes people will, it's basically your earnings per share in a way, but we can't really call it that because it's a non-GAAP measure, and it's a Bitcoin per share type measure that's valuable to people that love Bitcoin.
Okay, I'll just stop it there. Essentially what he's saying is that this Bitcoin yield that they're generating, you could think of that as like earnings, and then you could have a multiple, like in the same way that a company might have a 20 times earnings multiple and they're worth, 20 times their last 12 months earnings. You could say that, well, this company here, you have assets of 1.5 Bitcoin per share, but then also the increase, the yield that you got half a Bitcoin per share. And if you value that at 20 times half a Bitcoin per share, that should be worth, 10 Bitcoin per share. So really, if you value this company this way, it would be worth many, many times its underlying net assets. Just to give you a really simple example for why this is essentially nonsense, imagine you had a company and all the company owned was your $100 savings account. What is the company worth? The company is worth $100, right? But what's the yield going to be of that $100 over the next year? Let's say your savings account gives you a 5% yield. So this $100 is going to grow to $105. After 1 year, the company that owns this account, it has $105 of net assets. And I'm going to argue that that's all it's worth is $105. But essentially what Michael Saylor is arguing is that, well, they earned a $5 yield. So if you consider that as earnings and then you give them a 20 times multiple, 5 times 20 is 100. So the company maybe should be worth the $105 of actual assets plus $100 because that represents their earnings potential. So this company, which only owns a $105 savings account, should actually be worth $205. Now, obviously, in this example, you can see how ridiculous that would be. But, when you replace the savings account with Bitcoin, the underlying fundamentals don't really change. There's nothing magical about Bitcoin. It's an asset. In fact, I challenge you to listen to this interview of Michael Saylor here, and every time he mentions Bitcoin, just replace Bitcoin in your mind with gold. And ask yourself if you would accept this valuation method if the underlying asset were gold instead of Bitcoin. So in any case, I think I'll end it here. Again, I'm not saying that MicroStrategy stock is going to crash or something like that. If you believe that Bitcoin is going up in the long run, and if you believe that there's going to be a premium on MicroStrategy, this stock might be a great buy for you. But it's not for me, and I hope I explained why. And if you got something out of this video, subscribe to the channel. We're getting close to 300 subscribers now, so thank you to everyone who has subscribed. Let me know where you agree with me, where you disagree with me down in the comments below, and I hope to see you all in another video.